welcome to today's Bridging and Commercial Virtual Roundtable. Today we are in partnership with Specialist Lender Together, and our discussion is going to be centered around larger bridging loans and all of the different nuances that are involved in spotting these opportunities, placing them, and ultimately what will lead to a successful completion. We will also be considering valuation and legal aspects surrounding these larger loan sizes. And I'm really excited to have a panel today that incorporates pretty much every part of the transaction. But I will let them introduce themselves shortly and tell you a bit more about what each person in the group does. Just a reminder for everyone that's tuning in live, thank you very much for joining us. You do have the opportunity to ask questions throughout the session. There is a little section on your dashboard there that will come straight through to me, and hopefully we can get through as many of these as possible. We would love to encourage as much dialogue as we can on the topic. When we set out to do these roundtables, we very much wanted to gradually move away from the basics and really explore lesser discussed subtopics like this one. On the face of it, many of the same principles will apply as with a bridging loan of any size. However, these larger facilities can mean a greater deal of risk involved for the provider specifically. And this opens up questions perhaps pertaining to funding models and constraints and the need to really know the borrower in question. All round, just a greater deal of due diligence may need to be applied. Larger bridging loans may also incorporate more than one asset or perhaps a portfolio of properties being used as security. For brokers and intermediaries advising on these loans, there are certain considerations that need to be taken into account, and that will go a long way to ensuring that you, your clients, and the lender are all best placed to come out successfully. We'd also be remiss not to mention this backdrop of economic uncertainty that we're all facing and living in. And it's important for brokers to be able to identify solutions that creatively tackle the problems that their clients might be having. A bridging loan could be a suitable option for this. Although some data suggests that the market is looking for lower loan size thresholds when it comes to short-term lending, perhaps a topic for another roundtable, there are a multitude of reasons why a client might require a larger facility as part of perhaps a wider investment strategy during such a tumultuous time. This could incorporate taking advantage of an opportunity that has been presented by the circumstances, perhaps consolidation of debt, or for taxation purposes. The list is quite long. So we're here to discuss whether these higher value cases need necessarily come with increased complexity, and if they do, how to smoothly navigate this and improve one's confidence in steering your clients through the process, due in large part to choosing the right lenders. Some of the very best partners are on the panel today and are certainly experts in this field. So I will now hand over to the panel to introduce themselves, and I'll start with Sally.
Hi, I'm Sally Precious Ward, and I'm here representing Together today. I'm Business Development Manager for the south of the UK, covering a number of brokers and packages within the south of England.
Brilliant. Timothy, let's come over to you.
Thanks, Karen. Morning, everyone. I'm Timothy Lee. I'm one of the partners at Priority Law. We are a very niche firm of solicitors based in Cheadle, South Manchester, specialising in secured lending. It's all that we do. We don't act for anybody else. And we're currently doing between 200 and 250 million pounds of secured lending every single month in terms of new originations. And of that, about 100 million per month is purely on bridging.
Excellent. Thank you very much. Good to have you with us. Hayden, over to you.
I'm Hayden Thomas. I'm the Chief Commercial Officer for Cornerstone Finance Group down in Cardiff. We're a multifunctional broker. And part of my job, I also head up the commercial finance team, where all the bridging takes place within our business at the moment, both regulated and unregulated. So long in the job and 25 years experience plus in the industry.
Thank you very much, Hayden. Connor, can you tell us a bit more about you?
Hi everyone, my name's Connor from Enterprise Finance, which is a specialist packager in bridging, commercial, buy-to-let term and second charges.
Thank you very much. Andrew.
Morning everyone, my name is Andrew Murdoch. I'm Valuation Panel Director at Last Panel. We're a valuation panel manager. We act for around 90 different lenders across the country. I'm a chartered surveyor, RICS registered valuer, registered receiver as well, and I was formerly head of valuations at Together.
Fantastic, thank you very much. Jordan.
So I'm one of the senior property consultants here at Prop. So we're a broker, so we'll go out to the lenders to try and find our clients the best deal, kind of dealing with all types of property finance as well as bridging.
Fantastic, thank you very much. So we've heard from everyone now. I would like to go on to the first point here, which perhaps it sounds quite simplistic, but I'd like to see whether there is an industry standard or definition for what is a larger, what constitutes a larger bridging loan. Is there a threshold that we're looking at for this? Sally, I might start with you to see how Together assesses that.
Yeah, absolutely. I wouldn't say there's a specific industry standard. I could talk to you from a Together perspective, what we would consider to be a larger loan transaction, and it can be to do with value. So we would say something that's maybe over £1 million. We would maybe be paying particular attention to and treating that as a larger loan. But it could actually be less than that in value, but slightly more complex in what the actual security is that's being brought to us. So it could be a multitude of smaller value properties, therefore not accumulating as much, but would still be treated as a larger transaction by way of the nature of its makeup.
That makes sense, thank you. And Andrew, from a valuation perspective, how do you approach loan sizes in general, and where are the categories? How do they sit?
Yeah, so when we're asked to provide a quote for one of our lenders or one of our brokers or packages, we'll ask for the estimated value. Generally, I think from the surveying market, larger transactions are classed as sort of 5 million and above. They tend to involve prime assets, better quality assets, and they tend to be deemed by the firms of surveyors as larger value transactions. Many practices are generally well into the 1 to 5 million space. A number of them nationally will cover that, but generally it's in excess of 5 million. In terms of how it's approached by valuers and ourselves, I mean, we've got a panel of around 200 firms of our panel of all shapes and sizes, small local practices, mid-sized regional firms, all the way up to the large national and international firms. And for us, it's about ensuring that the lender gets the right firm, providing the right advice to them based on the nature of the assets. So a number of assets in excess of 1 million or 5 million can be relatively straightforward. Some can be relatively complicated. It's not necessarily driven by value, it's driven by the asset. So for us, it's about making sure that the right firm is approached to provide the right advice. So a lot of the larger national firms will have specialist teams. We recently instructed a £28 million shopping centre. That was vital. That went to a firm who had expertise in the national market of transacting and advising on shopping centres. So I think a lot of specialist assets can be dealt with by specialist practices. A lot of the national market stock can be dealt with by the national practices that have specialist teams in these fields, so shopping centres, land buying teams, industrial development teams, etc., etc. So I think the key for me is making sure that the right firm is approached to get the lender the right advice.
That's great, thank you. I want to move on just to get to the real crux of one of the parts of this topic, and I'll go to perhaps Hayden first for this. As a broker, when you receive a deal lands on your desk, or you've sought a deal out of this type, I'm going to say it goes without saying that everybody here has worked with Together, obviously a lender that can facilitate larger size deals. But more generally speaking, how do you go about knowing where to place a deal like this? Is there a big enough selection of providers to go to? What's the thought process for you?
So I think, a standard larger deal for us would, initially we would undertake triage through our triage team. So understanding more about the asset, more about the client, what the main drivers are. You know, is it about rate? Is it about loan to value? Is it about speed? And then typically we will source 4 or 5 options for each client that fit as best they can those main drivers, and then we'll present the 4 or 5 options to that client and allow them to choose the 1 or 2 potentially that we take forward to application and further discussion. So I think, you know, in terms of bridging, there are obviously, you know, a lot of providers out there. Navigating that for new entrants into the market, I think, is quite tough. And you tend to go for firms that you trust, that you've done business with before, rather than exploring the new. And I think new funders for us, probably we talk to them when we've exhausted our existing funder list.
Thank you very much for that. Jordan, I hope you can hear us now.
Yeah, so I've kind of hardwired myself in now, and hopefully with the headset you don't get any background noise as well.
Amazing, you're all kitted out.
Yeah.
Well, I'll come over to you next, whether you agree with that approach. I'm really interested to hear from Hayden that the size of the loan itself also comes along with other drivers, he called it, about what really is motivating the clients and what they need. Would you agree, or how do you tackle these?
Yeah, absolutely. I think it depends on everyone's individual circumstances and what their kind of most important goal is for the bridging loan. I think obviously we always look at the most cost effective, like we would if it was a mortgage front, the rate as well as the fees that come included. But it could be that speed is the most important thing over rate. So obviously we would be looking at the lenders, much as Hayden said, the ones you've got a good relationship with, that you can really trust that they're going to provide you with the speed that you require in that specific deal. I think with larger loans as well, it's very dependent on what the securities are made up for. So I've got some clients that, you know, it's a central London property. The property's a 4-bedroom mid-terrace, nothing weird and wonderful, but it's got a value of, you know, 3 million. I've also got clients that live, you know, outside of London. They've got an 8-bedroom property with a work unit on the land, 3 acres, whatever it may be. That potentially comes with a different type of lender who's maybe not so vanilla, as we call it.
And just to round off the broker point of view there, thanks for that, Jordan. Connor, what do you look for in a lender when you're specifically assessing larger loans? Do you have a strategy of who to approach and how and when?
So again, it really comes down to what the client's looking for. Sometimes clients be motivated by fees and rates, but a lot of the time we find it's about service and just who can do it quickest, who do we know, if we put the case to them, will actually complete on it. Because a lot of the time they are under a time pressure and you just don't have the time to go to one lender, get turned down, and then try another lender.
Thank you, that makes perfect sense. And then Sally, so just continuing, I guess, the natural journey of a transaction like this, when you get approached by one of these, let's say one of the brokers on the panel here today, what kind of questions are you asking? Again, paying particular attention to, I suppose, the size of the loan versus perhaps something smaller. What do you need to know as a lender straight off the bat?
Yeah, the questions are not dissimilar to a standard transaction, but and maybe it would be good to open it up to people as I break it down in this. So we've got kind of salient points that we are going to consider and speak to the broker or the packager about. And the first part is understanding the client. So be that client individual or a limited company, there may be some complex corporate structure that's sitting behind that, and then their overall credit position. And that is the same whether it's a small loan or whether it's a large loan. Just sometimes you may find from the corporate perspective, and perhaps Tim's a good person to ask this too, that there can be some slightly different corporate structures when you're talking about complicated transactions. They like to have them set up for an BV or a limited company that's sitting behind another limited company.
So we see a real spread of transactions. The average loan size that we do in the firm is about £500,000. So I would probably instinctively say anything over £1 million is what we treat as a big loan. But actually, if you look at the data on like recently completed transactions, about 10% of everything that we do is above £1 million. So it's only when you start getting into that sort of £10 million plus that you get into that sort of 1%, and that's where it's kind of really the big stuff. So and that can be a very, very, very expensive single asset. So you might have this enormous piece of prime development land that's just a cleared site that is either got planning or not got planning for something, and it might be worth 20-30 million pounds. We see a lot of, and those transactions should really be relatively simple, although they somehow seem to grow legs. We do a lot of more complicated big loans. So when you're into kind of park home sites and things like that, where there's a lot going on in terms of planning and trying to get a handle on who's in occupation and what the plans are and all this sort of stuff. And then you've got your properties in London that might be a new build super flat that's worth £5 million that, you know, someone's lending a couple of £1 million on, and again it should be relatively straightforward with a standard pack and data room. I think where we see things start to get messy is when you've got a portfolio. So you might have a multi-million-pound loan, but you could have 50 individual houses or different properties, and that's where it starts getting messy. We're quite good, I like to think, at making sure that those cases get dealt with properly in our firm. And obviously we're only ever acting for the lender, we don't act for borrowers, but we will make sure that if we need to put a team on it, we will do. If that, you know, it's the speed that might be important in a large transaction, just like it is with every other transaction, we can put literally 10 fee earners on a file to make sure that we can turn that around in a day or two, because that's what we do. Whereas we generally like to try and keep it simple and just have one fee earner dealing with it from start to finish. And we also have people that are experiencing particular asset types. So if it is a park home, for example, it's probably going to me, or, you know, it was one of the other partners. If it is a development, we've got a team that sort of specialise in that, and then you've got the more vanilla stuff and everything in between. We also try and pair fee earners up with brokers and also with particular borrowers, and when you've got repeat borrowers, because it's all about relationships for us, and we want to make sure that we've got that full transparency, ease of communication throughout the whole transaction. And I think where these transactions start to come a little bit unstuck is where you've got, for example, a borrower solicitor who just wants to overcomplicate it for no real reason. So you might have a banking lawyer, a property lawyer, all these different types of lawyers dealing with any particular transaction, and they seem to overcomplicate it for no real reason. But actually, a lot of these transactions can be treated the same. Anyone who knows priority law, and in particular when we do work for Together, we have the same questions that we ask. Anything over £500,000 gets our what we call our high value inquiries, and that is literally less than a dozen questions on any property, and we're asking those same questions on a £10 million loan as we are on a £600,000 loan. So it doesn't need to be inherently more complicated. It's just sometimes other people make it more complicated.
Would you say it's more likely, sorry, I was just going back on my point, the things to consider, would you say it's more likely with a larger loan transaction that the client type would be more complex?
Yeah, so you inherently get more borrowers who are based offshore. So we see a lot of BVI companies, Isle of Man companies, things like that. I guess there's more of an incentive for those people to wrap things up offshore. The flip side of that is there's been a huge amount of de-enveloping going on recently, where people are taking the assets that they did own in their BVI companies in like central London or wherever and taking them out because they're getting hammered with huge taxes. So I think we're seeing less of that on the individual assets, whereas we used to have a lot of Chinese investors buying expensive properties in London with offshore structures and complicated arrangements, and obviously let's get offshore opinions and all sorts of things that go along with that. Whereas now I think it's less of that. But yeah, you're absolutely right, Sally. You will get more offshore borrowers with the big stuff, because if it's a 2 up, 2 down in in Bolton, then you're not going to be getting a BVI company owning it generally.
Yeah, sorry, just Karen, going back to your original point that you'd asked about what do we consider as a lender. So the client is one part, but The other questions that I would ask are the same for a smaller or for a larger transaction. So type of client, what is the asset? We need to understand whether it is a single dwelling or something more complex. And Andrew talked earlier about a shopping centre. So the way that we would view a single asset versus the way that we would view and the valuation information we would need on that asset if it was a shopping centre is then quite different, slightly more complex. The affordability position, again, you need to understand the affordability, whether it is a small transaction or a large transaction. I would say for that, it does start to get more complicated. So again, using that similarity, you've got a single asset that you're using a single AST for, that's a straightforward affordability query. Whereas if you've got a shopping centre, you're going to need to understand all the different leases that are in place for each of those individual units, the additional risk that comes on board with that. I'm going to leave Andrew to probably discuss that point in more detail. But again, the experience of your clients, what level of experience do they have in the nature of this transaction? Is it a large loan? Is it in a particular kind of security type where they've got experience in that sector, if it's commercial? Understanding the deposit source, as you would with any transaction, and their reason for borrowing. So the salient points are no different on a larger loan transaction that we would need to know from a lender. It's just the individual parts of those points that may get slightly more complicated.
Thank you, Sally, and Tim, for that good overview and introduction to the multitude of complexities that could be there, but also the similarities between a facility of any size. Andrew, you've been nicely introed there by Sally to kind of expand on some of the valuation aspects there and what you're seeing. I'm quite interested in any trends that are emerging as well in regard to, I mean, Timothy mentioned it, there are people who are busy dismantling or de-enveloping, you call it, portfolios that they've got and investments that they've got. Is that something that you would see too, and are any other notable trends that you might be spotting?
I think in terms of the customer profile, I think probably Sally and our broker friends are probably better placed to answer that one. But just touching on some of the points about, sorry to sort of go back, but in order to ensure a sort of a smooth valuation journey without sounding too cliche about it, I mean, Tim touched on some of the complexities attached, and we've talked about a shopping centre with multiple leases, and you'd be surprised at how difficult it is to prize this information out of applicants. All right, where it's a purchase, they may not have that to hand, but where it's a refinance or an existing asset they've got, invariably it's incredibly difficult to get all of this information out of them, and that makes life incredibly difficult for the valuer to give the lender their accurate opinion of value. And I think it's sort of incumbent on all parties to try and get what the valuer needs so that they can give the right advice first time round, rather than that they'll go to site, they'll meet the applicant, they'll be waiting days, weeks for leases, tenancy schedules, copies of all sorts of information that just isn't coming. And sometimes it gets to a point where the valuer says, well, I'm going to have to make my own assumptions on this, and it's up to the lender as to whether they can get comfortable with the assumptions that I've made. So I think like Tim said, large prime apartments, city centres, they should be relatively straightforward. It should be a relatively smooth valuation process. Where there are multiple assets, multiple units, multiple tenancies, queries over X, Y, and Z, the valuation process can become protracted. And I think that's where don't get me wrong, part of our role is to try and get all of this information out of the applicant or out of the broker to help the valuer complete the process and give the lender the advice they need. But I think sort of all parties need to be aware that where there are delays in getting this information, ultimately it's going to delay the valuation process. And we touched on speed before, and if speed is of the essence, then it's just incredibly frustrating the amount of times that this information isn't to hand, or nobody's prepared to get it, or the borrower just sort of disappears once the valuer's arranged access to the property. So I think in order to fall in line with the speed part of the process, I think it's vital to understand the type of information that the valuer is going to need to get a realistic opinion of value.
Thanks, Andrew. Reading between the lines, although I think you were pretty overt about it, would you say that you would like a bit more of this to be pre-packaged, perhaps by the broker or the introducing party before it gets to valuation stage?
Yeah, I think that would help hugely. You know, be mindful of the types of information that are going to be relevant to a transaction, whether it's for the lender or their solicitors to take a view on, or whether it's for the valuer to factor into the valuation. So whether that is, you know, tenancy agreements, I don't know, I mean, I was going to say planning consents, but they're available by the local authority anyway, whether it's, you know, any other agreements or anything that's in place that is likely to impact on the valuation, whether positively or negatively. You can understand why applicants might be reluctant to pass something on that might not shine a, you know, a rose-tinted view on a property, but equally there's a lot that can have a positive effect, and if the valuer has got that to hand, they can take that into account with the valuation. But if they haven't got it, they almost have to ignore it, and then you're potentially in the realms of they'll produce a report, the information will come in afterwards, they're then trying to unpick what they've done, revalue the property. That can lead to more delays. In some cases they may say, well, that's fine, but I'm going to have to charge you an extra fee to do this, and that then leads into a whole other discussion with brokers and applicants about what's reasonable, what's not, what's within the scope of the original instruction. So to answer your question, yes, if we or the valuers can be presented with all of the information that they require, that invariably will lead to a smooth evaluation process.
Yeah. Well, it then makes sense for me to come over to one of the brokers and just kind of find out from you where, I suppose, the sticking points are when it comes to extracting this information from borrowers. Do you find that sometimes these things are withheld on the basis of hoping to achieve a certain value or a certain outcome for the deal? Connor, what do you think about Andrew's comments and perhaps the smoothing of the process from an information point of view?
Well, I think it really depends on the client. You have some clients who are very responsive and will send stuff over straight away. You have other clients who are a little bit less so, but because typically evaluations, they're instructed very early on in the process, that a lot of the time you haven't got all those documents yet, because you could be instructed evaluation day one. As soon as they have the terms ready to go, because of the speed of the bridge, you just need to get someone out and value the property. But I think I personally find there's not too many times I feel like they're hiding something from me. It's more just the time it takes to actually get the documents.
That's a really fair point. I mean, Jordan, what's your take?
Yeah, no, I agree with that. Some are easier than others. Some clients, and again, depends if they're purchasing, like Andrew said, that my client may not have that available, and then you're trying to extract that information from a seller's solicitors or whatever it may be. So that information isn't always easy to obtain. But also, like, we make it very clear to the valuer, you know, we're here to help. If you do require anything, please let us know, because then we can do the chasing around, try and get it as quickly as possible. But sometimes there's not the direct communication with the valuer between us. They would rather just speak to the applicant, and then we're kind of chasing in the background trying to help. But others, you know, as long as, I think it's communication, isn't it? Just like the communication between us and the client, any communication we can have with the surveyor, the better. You know, we're always here to help as well. So I think if there is anything we're asked to provide, we'll always do our best, but it's whether you can be provided with the information from the client or the seller.
May I just ask a question on that point? Is it more noticeable when you're having a valuation request in for a bridge over a term loan that the information is more likely to be missing? Because if they're applying for a term loan, you would anticipate that the affordability assessment would have been done to make sure that it fits on a from a lending perspective, that the broker packager would have had that information at that point. So do you notice a disparity between bridging valuations versus commercial term?
No, I think as Connor and Jordan mentioned, I mean, look, I didn't mean to sound critical of applicants. That wasn't my intention at all. I mean, like they said, there's, you know, like in all walks of life, you get people who are more relaxed and casual about things and don't seem to think things matter, whereas you get some some who are very clued up and will happily package a list of information to the valuer and off we go. So, you know, that wasn't my intention at all. But no, Sally, to answer your question, no, I think it very much depends on the characters involved, you know, the level of sophistication of the borrower, you know, their level of detail, how engaged they are. You know, some just seem to think they can, you know, agree to a lender, agree to a valuation, off we go, and they just sort of wait for the money. Some are very engaged in the process, they'll be engaging with the valuers, you know, and similar to Jordan says, you know, we're here to help as well if we can. You know, we will try and get the information out there, and equally, you know, let's be honest, some valuers aren't as proactive as they should be. I'm not, you know, going to sit here and pretend all valuers are absolutely fantastic. Again, it's like all walks of life. You get some very, very good firms, some very, very good surveyors who are very proactive. Equally, we deal with some firms that are quite frustrating to deal with. And from our point of view, you know, as well as the lenders and brokers knowing their customer, it's about us knowing our panel, understanding our panel, who's reliable, who's in the right, you know, market, who's best to approach, who can perform, because, you know, particularly with the bridging deals, speed is of the essence. And, you know, we're seeing a lot of challenges around valuer turnaround times and timescales at the moment, which we'll probably touch on a bit more later. But for us, it's about approaching the right valuer who is going to ask the right questions, who is going to perform. But in terms of term and bridge, no, I think it very much depends on who the customer is, how sort of experienced about the whole process they are, and how engaged they are in it.
Thank you very much, Andrew. Tim, if I can come over to you to just talk a bit more about risk assessment when it comes to larger facilities and some of the, I suppose, checks you'll be doing on behalf of the lender to get comfortable with placing larger loans.
Sure. So from our perspective, as I alluded to earlier, we try as best we can and apply the same principles to all loans that we do. Obviously, we'll be slightly more relaxed on a 50 grand second charge than we will on a 10 million pound, you know, development site. But generally speaking, in terms of the inquiries that we raise, we don't overcomplicate it when it comes to the bigger stuff, but equally we keep it as light as possible on the smaller side of things. So really for us, we want to make sure that we've got the right person internally dealing with that, but that's more of a, you know, a view on like asset type. So, you know, we keep talking about shopping centres. We've got a few people who are very experienced at dealing with, you know, big messy shopping centres with dozens, if not hundreds, of individual leases, and, you know, we've got little teams that we are ready to go that we can put on things when we've got a bridge on a shopping centre, for example. But ultimately, we follow that same process. So every file has got an experienced fee earner who does nothing but act for lenders in relation to secured lending transactions. You know, they'll spend statistically about half of their time doing bridging, so very experienced in doing bridging, and we're always very responsive and action everything extremely quickly. So that's kind of just in our blood. In terms of the actual risk, I guess that, you know, yes, we will look more closely as the loan size gets bigger, and as Sally said earlier, you've got offshore borrowers, and that sometimes, rightly or wrongly, will raise alarm bells. So we've got to look into those things more closely, and we spend a lot of time doing, you know, due diligence. So I've got a very straightforward property transaction going through at the moment. It's a £2.5 million transaction, and the property is literally like a single title, very, very straightforward. Property due diligence was done in a couple of days. But we've spent several weeks trying to get a handle on KYC, because we've got all sorts of borrowers all over the world. Everyone fails the ID checks that are undertaken, and, you know, no one seems to be able to get in front of a solicitor to be able to give certified ID and proof of residence. So, you know, it gets messy for a different reason. So you can have a very simple property transaction, but a very messy corporate structure, or just lots of different borrowers. We do some deals where we can lend to an LLP, for example, and then they'll have 50 people that all invested into this transaction. So we've got to think, well, who do we need ID for, and doing all of those sorts of things. But generally speaking, we follow our process and we try not to let the cases run away, because in our experience, there's no real reason why something has to be particularly complicated. You know, it might take us a bit longer. We might have to put someone more experienced. We might have to put a little bit of a team, but there's no reason why there should be any transaction, however complicated, that, you know, isn't capable of being resolved, you know, in a matter of days. probably that's people are thinking that's a bit bonkers, but that's just the reality of it. If you've got the right team, it's fine. What I get frustrated with is how you have a straightforward transaction that just happens to be high value, and you end up with the solicitors on the other side over-egging it with a massive army of people trying to renegotiate standard security documents and coming up with paperwork that you don't need and all sorts of stuff. So, I think it's probably something that Karen you want to touch on later, but I think the main thing is that a borrower picks the right solicitor, and I can say that because we don't act for borrowers, so I'm not touting for the business, but the deals that we see go smoothly are the ones where you've got a good relationship with the solicitor, where we can pick up the phone to them, where they're responsive, where they've got the resources and the capacity to deal with something quickly. I'm not just talking speed in terms of bridging loan, but just generally, whether it's a big loan or a small loan, they need to be there and responsive. What we find far too often, unfortunately, is if we get an instruction, we will action it at our end within minutes of receiving the instruction from the lender, and then it's a waiting game, and we might be waiting a day, it might be a week, it might be 4 weeks, like you just don't know. And some solicitors will answer the phone, some solicitors will just be completely AWOL from the beginning, and that's kind of our frustration, and I guess the brokers will sort of experience that and feel that pain. So you want to get the borrower using someone that they trust. Obviously, it's not for me or even the broker to sort of push them towards a particular solicitor, but if it's someone who knows the property, someone who knows the lender and their requirements, someone who's worked with the lender's solicitor before. We've dealt with thousands and thousands of solicitors. I don't think there's probably a single solicitor in the country that we haven't dealt with in the last sort of 17 years that we've been going. So and obviously we do a lot of work for Together, so we've come across most people know our requirements, the brokers know our requirements. A lot of what Andrew is asking for in terms of the occupancy information is what we're asking for anyway, so yeah, the brokers can definitely try and get that process started, getting things like tenancy schedules, asking the borrower to start packaging up a data room with the leases and things like that in it is very important, because we're all asking for the same information. There should never be a transaction where we get instructed and the valuation's been going for weeks and weeks and weeks, and yet no one knows who's in occupation of the property, which as bizarre as it sounds, happens all too often.
Thank you, Tim. There's quite a bit there to respond to, but I'll come over to Hayden to pick up on a couple of the points. We will, and perhaps we can get into it now around the relevance or appropriateness of the legal counsel that the borrowers are taking on. This is a problem that I've certainly heard of in all 10, 11 years of working in this market as well. So Hayden, what are your views on that, and how can we possibly tackle it in general?
Yeah, I think Andrew's point and Tim's point link perfectly together. So a lot of the information is held by the client's solicitor, and I share the pain of solicitors not answering the phone or emails, or no communication for 4 or 5 weeks, and all of a sudden they're ready the day before and they want to know when are we completing. So that happens. I think interestingly, probably the opposite to Tim experience-wise, in terms of people overcomplicating transactions. I think quite often we see inexperienced residential conveyancing experts, experts with a small e, getting involved in relatively complex commercial bridging transactions, and quite frankly they're out of their depth, and I think that's a massive problem for us. And then that information request, which should be simple, becomes really, really painful. So we see it quite often. Do we make recommendations? Yes, we do make recommendations where we can to a range of firms that we believe have the experience. I think Tim's point is excellent around having experience of dealing with the lender as well as the property type. So and knowing the asset, sometimes it is useful, sometimes it's perhaps not. If it's a residential property and they've done a previous job on it which wasn't as complex, then that can sometimes be a barrier. So it's a big issue for us. I think Andrew raised earlier on, an emerging trend of some valuers who are not particularly responsive in terms of availability. And in the bridging market, when you see a valuation quote come back where the value is not available for 4 weeks, it's not a lot of use to us either. So I think that's a worrying trend. I think COVID, pandemic, etc., is usually the excuse for that, but we're a couple of years on from that, so that's definitely a worrying point for us.
In terms of smooth, just staying with you, Hayden, for a second, do you think that technology advancements in terms of speeding up some of these processes and communication, do you think that we're getting there from a tech point of view, or what would you like to see more of?
I think we see a lot more AVM out there in the market, obviously on valuations. We see some interesting figures coming back on that. So Andrew can probably opine more professionally than me on how successful it is. But that certainly is a growing trend. I think that's quite often part of the choice of funder that we choose. Technology-wise, in the legal world, I don't really see a lot of advancement, to be honest with you. So it kind of when you get into a conversation about local authority searches, etc., and kind of everyone dragging their heels, I think that tends to come from the client solicitors. And again, I think it goes back to their experience in the transactions, and if they haven't done bridging before, they don't appreciate the speed required. But I'd probably say technology in legal would be the area that, if you asked me to, if you gave me some money to invest, that's probably where I'd put it.
Tim, any thoughts on that?
I thought you'd say that, Karen. Thanks very much. So yeah, I think that's really important. I think we view Priority Law view technology quite differently to a lot of the sort of dinosaurs that Hayden's probably referring to. So when we've got a lot of automation within our process already, so we work very closely with a very small number of lenders, and we've got various systems, a lot of which were built completely bespoke for us, that enable us to go from us being instructed to an email going out to the solicitors that's acting for the borrower within minutes, and it can be even quicker than that. It's not automated fully because we don't want that, but the systems are there to do that. And then similarly, we have a case management system that a lot of people on the call will have been familiar with called Redbrick, which we have a portal which, as with all things, it's not perfect, and it's reliant on the human beings to update things and use it properly. But ultimately, we've got a link that will get sent out within minutes of every single instruction that we get, and that will follow the entire process from the initial email going out to the solicitor, every single one of our inquiries completely transparent, laid out there, every single one of them. And then it lists all the security documents, so, loan agreement, legal charge, debenture, solicitor certificate, board minutes, all the different things that you need to get a transaction done. And then we even have post-completion matters, which hopefully no one else on this call is interested in, but all the stuff that we need in terms of bankruptcy searches, undertakings, OS1s. So we literally say on every single deal, here's our list. And it's like a noddy's guide to how to get money out of Priority Law and our lender clients. We've got red crosses if it's not been done, green ticks if it has been done, notes, dates, everything's timestamped and all the rest of it. So we've invested a lot in technology and continue to do so to bring things like that to market, which a lot of other solicitors aren't doing, a lot of lenders aren't doing, but we pride ourselves on that transparency and obviously the speed, and there is no way that we can do that without the technology, and we'll continue to invest in that and do it. We trialed a while ago getting our system to try and generate a report on title, and we can do a lot in terms of automating that, but what we find is that by the time you've answered 100 questions to the computer to enable it to automatically produce a report on title, you might as well just do the bloody thing yourself. So it's a bit of swings around, but just like Andrew wouldn't want his valuers with their expert knowledge of particular property types or areas, whatever, just doing it in an automated way. Equally, we don't want our lawyers being robots. It's how the technology can be there to assist us. But as Hayden was sort of alluding to, I think there's definitely a mismatch between the tech that will be used by the lenders and the lender solicitors and what the borrower solicitors are doing, which is generally sort of stuck a decade or two ago. You mentioned as well, Hayden, just to touch on it, no search indemnity policy is something that we and our lenders will pretty much accept on every single transaction. It never used to be like that. It used to only be on remortgages and full searches were required. But given the pressures that local authorities are under and just the general need to get transactions pushed through at lightning speed, all of our clients across the board now accept no search indemnity. So that shouldn't be an excuse. But again, that's about picking the right lender, the right lender's solicitors, and doing it that way. The only other thing I would say is just when it comes to priority law in particular, you can always pick up the phone to us, whether it's as a broker or an introducer or whatever, and tell us about a deal, talk it through. We can talk through what might be required, for Sally's offshore companies and things like that, so that everything's lined up, because those things can take time to resolve. But also, it's just useful to have a conversation to get that process started. So rather than this kind of traditional stage process where you'll have your valuation, you wait a period of time for that to come through, and then you review the valuation and it goes to underwriting, whatever, we can be doing the legal process in parallel with that. Priority law don't charge abortive fees for transactions that don't go ahead generally, and we don't ask for undertakings for costs, for example. So within reason, we're always happy to get stuck in on a transaction, because that could be the difference between things happening days, if not weeks earlier.
Yeah. Thank you
as
very
well,
much.
not digressing from the fact that we are talking about larger loan transactions. There is, when we talk about automation, we've also spoken about the fact that these are detailed and very diverse in nature. So that step away really from automation, that they wouldn't fit within an automated criteria of a tick box for assessing income or assessing that client, that there needs to be this, the people that are involved. I think everybody today, we all come from a very different area. We're all working for the same purpose. We're all working for that client. So, and we all want the same information in some way, shape, or form. We want the income to assess the affordability. Andrew wants the income to assess the affordability on the valuation piece. The broker needs it in order to be able to give the advice to make sure that they are recommending the right person. So nobody's asking for anything that's any different. We've all got a need for the same information, but it's just because it is perhaps slightly more complex in certain scenarios that doesn't allow IT systems to be brought up to date to fit with that scenario.
I think it's interesting though, Sally, because as Tim said, technology can help to a point, and exactly in the same way that Priority Law have developed their own system, we've got our own portal as well that you at Together have access to, our broker partners have access to. We can communicate directly with our brokers, with our lenders, let them know exactly where a case is up to. Brokers and lenders can upload documents to it, send us messages, and that smooths the process. It helps hugely. It's not an answer to everything, but it speeds up certain elements. If you just want to drag and drop a lease in there or a tenancy schedule, you can do that. But equally, as Tim said, a good old-fashioned phone call it can be vital if somebody wants to. If there's certain nuances or subtleties to a valuation or a property that the valuer needs to take into account, we can have that conversation. We can happily pass that message on, or if need be, we can put you in direct contact with the valuer to explain that to him. So I think technology does help to a certain extent. I don't think it's going to come to a point, particularly on the valuation piece, where it's the answer to everything and you can automate everything. But I think you can automate up to a certain point, which will naturally help the efficiencies of the process.
Thank you very much. It makes a good argument for streamlining the things that you can, so that the humans can focus on the more complex aspects. Sally, when we were preparing for this for today, you have you mentioned you have a recent case that perhaps might add some additional colour to the larger loan aspect of the discussion. I don't know if you would love to share some of that information, and we can discuss it briefly.
Yeah, absolutely. So I've got the press release that was done in relation to it. So it was a student apartment deal that we lent on, £7.5 million on a bridging finance. The exit is that it's going to go with a more high street lender, but as we've all discussed today, speed was of the essence in this particular transaction, being let down by a previous lender. But when we're talking about was it additionally complex? I was speaking to the underwriting team about it this morning for a bit of background information, and they said actually it was from an underwriting perspective a relatively straightforward transaction, in that the client had a good deposit, actually had cash to put into it. There was some solid background income there as well, so there wasn't an issue with affordability. They were borrowing 7.5 million on about 11 million valuation. The student block, as it were, at that time were not managed very well. It was managed by a non-student specialist, so it was only about 50% let. And so the borrower's plan was they were going to buy this, get it to a point where it was fully let, and at that point it would be easy to turn away with a high street lender. It just couldn't be turned away at this point, given the kind of income scenario. But the way that we reviewed it is that we used market rent that was provided for us valuation. As I say, there was the background income that was there in order to support it. So the question for, I guess, really to open up to everybody else, on a student block accommodation, maybe Andrew, how would you value that differently? And what would you take into account? So for us, for example, we use the valuation of a 180-day VP value rather than the value as it was fully let, but that is a lender underwriting decision. But what are the extra things that you would take into account from a valuation perspective?
So I think from a valuation perspective, selecting the right firm is key. I mean, a number of different firms will have a certain amount of knowledge that they could value a student block. However, what we have seen, particularly for the larger transactions, there are some of the larger national practices have specialist student teams that just deal with the development and valuation of student blocks. You know, they're in the market, they're transacting them, they're valuing them, they're dealing with the customers and the ultimate owners and purchasers of these things. So they've got a great deal of evidence of how to apply the right sort of investment yields to them. I think particularly with student blocks, the difference between them and sort of traditional blocks of residential apartments is looking at the income. You know, they're not always occupied 365 days a year as normal residential flats would be. So does the valuer take into account the rates per week multiplied by over the term times and use that? You've then got to net off a certain amount of costs to get to a net rent, and then apply the correct investment yield to that. It's obviously going to be an investment, so you've then got purchases costs to deduct, etc., etc. I think the key to all valuations is the assumptions and special assumptions. You know, what information does the lender want? And then, you know, you mentioned that you lent against the 180-day VP value. I mean, is it ever likely to come vacant? I mean, I don't know the particular block in question, but you know, I appreciate that's obviously a safety net that a number of lenders have in place. They'll take the market value, they'll then ask the valuer to reduce it again by assuming it's fully vacant, and then lend, you know, based off their LTV criteria against that. That is an incredibly safe way of doing it for the lender. Especially from a valuation perspective, you've got to think, well, what is the reality of this thing ever becoming fully vacant? You know, if it's right next to a university campus, it's a good block. I suppose the only way of doing it is, you know, the management company failing, the borrower failing to perform, the thing effectively been left to go to rack and ruin. So there's a number of different sort of factors to take into account. The key one is the income. The income, the location. You know, what does the evidence say? What are similar blocks in similar sort of areas of similar cities transacting in? For the larger, higher value blocks, it may well be a national market. So you may have a good core of investors who operate nationally. You know, they'll buy these investments in Manchester, Leicester, Birmingham. They won't just be restricted to their local market. It sort of transcends those markets. Whereas for the lower value multi-let student investments, you know, sort of blocks below 10 or sort of HMO type stuff, it may very well be in the local market. It may only appeal, it's likely to only appeal to a local owner occupier, and they may have different requirements to some of the more sophisticated corporate entities that are looking to buy the better quality, higher value, prime location assets.
That's brilliant. Thank you very much, Andrew. It's extremely useful, granular detail there that I think everybody will benefit from. I'm just slightly conscious of time. We have absolutely whizzed through this hour. I wanted to just come over to Connor quickly. We've been talking a lot about the importance of working with the right team here from a legal and valuation point of view. How important would you say for loans like this, which can tend to get more complicated, to work with the right broker? How much can you say about the value that a good intermediary will bring to these transactions?
I personally think it's one of, especially when it comes to bridging, one of the most important parts of it, because as we've all touched upon, it's all about trusted lenders, surveyors, solicitors. You kind of want everyone to work in cohesion, and the only way that really I find it works anyway is if you have a middleman between everyone to make sure everyone's talking. Because at the end of the day, a lot of the time what we're doing is we're just making sure everyone's talking to each other and that there's not confusion. Again, I find particularly with solicitors, if the client hasn't got their right solicitor, and a lot of time they go for the cheapest isn't always the best, that they can slow down the transaction a lot, and no one likes being chased by brokers. So it can be difficult for us if we don't have a solicitor that not understands the transaction but sees this as a hindrance, when really all we try to do is help, offer our input. Where sometimes it is a valid input, we do help to get transactions done, but it's, yeah, for me it's very important to make sure that you have the right solicitors, have the right lenders on the transaction, because it can really make or break a deal, particularly if you're looking at auction purchases. There's something like that, you need everyone on the ball.
Thank you for that. You've convinced me for sure. Jordan, just final thoughts from you on the value that you believe that, you know, yourself and how you execute things at Prop. How can you add to the transaction to make it as much of a success as possible?
Yeah, I think, you know, there's lots of different times where people have maybe tried to automate almost a broker's job. Every single transaction is different. It comes with its different quirks. We have the relationships with the lenders, so obviously that plays a big part, and your experience. Just like all of us, we started somewhere, and where we are now, we know much more than what we did when we first started broking or whatever it may be. And sometimes experience from a broker is key. It's the experience with lenders. You've got to give some lenders a try first time. There's always going to be that first case with a new lender, or if you were new to broking, so you put your trust in the lender at the time. But I think a lot of what we do is from our experience. We can provide that to the client, as they a lot of the time don't really know what they're doing. Even some of our experienced investors, they're still unsure of who to go to for certain transactions, and that's where we fit in. And exactly what Connor said, we are there to try and pull everybody together. If maybe the client has chosen a solicitor who isn't pulling their weight, we are there to do that constant chasing for them. So for myself, we have case handlers, because obviously I'm on the phone a lot. Our case handlers are constantly chasing people who maybe should be coming back or responding sooner than they are. Without that chasing, things could get left for weeks. So I think we do kind of try and ring fence everybody into the same area, so we can just get the transaction from start to finish as quickly as possible.
Brilliant. Thank you very much, Jordan. Final thoughts from you, Hayden. Anything you'd like to add before we log off?
No, I just agree with that. I think, I did 25 years in a high street bank. When I started, relationship managers existed across the country who supported clients. They don't exist in most circumstances now, and it's the broker community that fills that gap. So it's pulling together all of the interested parties and helping our clients maneuver the finance geography really is what it's all about. So lots of choices in there, and cost is always one of them. But I think Andrew displayed what you get from a quality valuer, and that's not usually the cheapest quote. So that's always one of our conversations, and the same applies to legal. So I think we're there to pull everything together, and it's kind of, I guess, conductor of an orchestra, really, is how we see it.
Thank you so much, Hayden. Thank you for your input today. Sally, would you like to round us off before we say goodbye to the people who've tuned in?
Yeah, absolutely. I think just echoing everybody's points that they've raised today, it's very much a case of people are pushing for speed, but it's understanding what you need from that speed. And quite often I get asked that. Together, a very experienced lender in the specialist market, and we are well known for the speed with which we can conduct a transaction. But I always put on the bottom of the email when I'm asked that question, can you do it within this period of time? Yes, we can underwrite it and get to offer and solicitors within that period of time, but it is reliant upon you having a broker that is on top of that speed and getting the details from the client. It's about the valuer being on board and being able to do the transaction within that speed timescale that's required, and it's about the solicitors being on board. So it's been a really good panel actually today, listening coming from different areas that I certainly know from a lender perspective that we need all these experts and everybody to be working in cohesion with each other to be able to get the right outcome.
Thank you very much, Sally, and thank you for your support for putting on the roundtable today. Thank you very much to Tim and to Andrew. Your expert insight has been very, very valuable as part of this discussion. And again, thank you to everyone on the panel. Yeah, that just about wraps things up. We will be publishing a highlights article about this particular roundtable next week on bridging and commercial. So we'll have the video there in full. You can share that with your colleagues and anybody else that you think could benefit from the information shared today. And yes, thank you very much. I hope you have a wonderful week, and we'll see you at the next one.